Hi friends, in this tutorial we are going to learn what are the IT deductions are applicable for India. This is especially for 2015 and 2016 years, so it may be changed in the future or it may be updated based on the rules of the government or income tax and RBA rules. So if you go to medical insurance, we will be having chapter 4. Under chapter 4 we will be having medical insurance and medical treatment for handicap dependent and medical treatment for specified diseases and interest on educational loan, donations to certify certain funds, charitable trust. Just like example, if you are going to give some donation in the Tirupati, so that will be applicable to this. And deduction in respect of rents paid and uh, permanent physical disability included blindness and uh, additional uh, ANPS contribution. Now come to medical insurance. If you are going to click on here, 25,000 in case of individual, spouse and children. So 25,000 you can able to make the medical insurance for the year. Okay. uh, okay, and then if you go to additional benefit of 25,000 in case of parents and below 65 years, 30,000 in case of parents and above 65 years for senior citizens. Okay, so like this you can able to claim insurance, medical insurance amount from the income tax deductions. And one more thing is this will be medical insurance will be covered under 80D, and then individual dependents so eligible for this tax benefit is individual, spouse and children and parents as well. Okay, so this is one of the good chance to deduct some income tax from your salary. And then if you go to medical treatment for handicap dependent, so if your dependent is having some any handicap, so you can able to uh, do this up to 75,000 less than 80% of disability. And if disability is more than 80%, then you can able to claim up to 1.25 lakh. Okay, so uh, for this you should be able to provide the certificate from the government. So that will be that I will cover in the next chapters. Okay, and next tutorial. So be concentrate on next videos as well. And medical treatment for specified disease. So if expenditure must be actually incurred by resident assessee of on himself or dependent relative for medical treatment of specified disease or alignment. This disease and sorry, this disease have been specified in Rule HDD, a certificate in Form 101 is to be furnished by the assessee from any registered doctor. So doctor must be government doctor. From the government doctor, you should be able to uh, bring the certificate from the government doctor. And then this will be covered under 80DD 80DB. Okay, so individual, spouse, children, parents and dependent brothers and sisters will be applicable to under this chapter 4. And interest on educational loan. If anybody is having taken any interest whenever they were doing the education, after getting the job they have to pay the amount. So for this educational loan you have to pay the, you can able to claim income tax. Interest paid for the first 8 years on loan taken on higher education such as engineering and medical, etc. Eligible if loan is availed by the employee for uh, self spouse sorry eligible if loan is availed by the employee for self, spouse and children for pursuing higher education. Okay, loans availed only from financial institution, bank only is eligible. So whenever you are going to take, whenever you are taken loans from the bank, those things are eligible for interest on educational loan. Okay, so this will be come under 80E. Okay, donations to certain funds, charitable institution, etc. So these, if you are going to pay some amount to the donations, so it will be covered under 80G to any charitable trust uh, provided by 80G. Okay, you can able to send that one. Okay, and come to the various donations specified in section 80G are eligible for deducting up to either 100% or 50% with or without restriction as provided in 80G. Okay, so deduction in respect to rents paid, so it will be come under rents paid. Okay, uh, education availed in the law, at least deduction availed in the at least of assessee or total spouse or minor child should not own residential accommodation at the place of employment. Rent paid less 10% of total income and rupees 10 per month, 2000 per month and 25% of total income. Okay, he should not be in receipt of total house rent allowance. Should be not in receipt of house rent allowance. He should not have self-occupied residential premises in any other place. So these are the some of the rules and regulations under this activity. This will become under 80GG. So uh, next one is a permanent physical disability including blindness. So if your uh, physical disability will be there up to 80%, less than 80%, so you can able to claim up to 75,000. So it should be greater than 40% of disability, and you have to get the permission from the certificate from the government doctor uh, to avail this income tax deduction. So we will see this one in the future chapter, and this is eligible for individual person only. So additional NPS contribution. So uh, National Pension Scheme. So it will be coming under 80CC D1B. So this will be applicable to individual. So it will be limited to 50,000 rupees. So these are the one of the best things we need to understand. Come to next session is we can able to see that pension pension policy 80CCC. So 80CCC will be like pension funds. This section 80CCC stipulated that an investment in pension funds is eligible for deduction from your income. Section 80CCC invest limit is clubbed with the limit of sections 80C. For example, if it means let me read that. It means that the total deduction available for 80CCC and 80C is 1 lakh. This also means that your investment in pension funds up to 1 lakh can be claimed as deduction with respect to 80CC. However, as mentioned earlier, the total deduction under 80CC cannot exceed 1.5 lakh. So this will be like 1.5 lakh. So this rule was changed. So this one I need to update it, and then just okay. So this will become under 80CC. Okay. So Provident fund and voluntary provident fund is PF is automatically deducted from your salary. Both you and your employer contribution contribute to it. While employer's contribution is exempt from the tax, your contribution, that is employer's contribution, is counted towards the second 80C investment. So employer contribution won't come under this one. So it will be exempt from the tax. So come to provident fund. So provident fund and voluntary provident fund will be covered under 80C, and it is for individual. And you can able to see that provident fund and voluntary provident fund VPF is automatically deducted from your salary. Both you and your employer eligible contribute to it. While employer contribution is exempt from the tax, your contribution is eligible for the under 80C. So this is a voluntary provident fund. So you can also have an option to contribute additional amounts through voluntary contributions. So the rate of interest is 8.5% per annum. This is and it is tax free. Okay, so all interest also will be come under tax free if you would go to the VPF. Okay, these 10 items we have read now, and we will know about another 10 items in the next chapter. Let's next video. So let's be friends. Please watch the next video as well. Bye for now. I hope you are going to like, share, and give your valuable comments on this one. Please share your comments on this video, and if you have any doubts, you can able to ask in the comment section. I will try to solve it. I will try to give information for you. Thank you.